Hey folks, Chris Versace here, and it is time for another Stocks and Markets podcast from the street. And I'm fortunate enough to be here back, as you can see, at the New York Stock Exchange. And that means we have one of our favorite guests joining me for this installment of the podcast, Mr. Jay Woods from Freedom Capital Management. Jay, quite the market we've been in. October, better than expected. We're starting off November. Gonna ask you right out of the gate, with your technical hat on. Anything change big in October that we need to know about going into November?
Well, the seasonal factors that we've talked about have not been as reliable as we thought. This bull has been much stronger, but what we're seeing right now is a little momentum shift, and we'll talk about it during the podcast. So as we kick off November, we're doing this as we're in the midst of the longest government shutdown ever.
Correct.
We are in a very strong earnings season, but we're not getting the follow-through across the board that we're used to, and it feels as if there is a little turbulence under the surface with the breadth of the market.
let's talk about that, right? Because we're coming after a week of Meta, Microsoft, Google, Amazon, Apple.
Yep.
A lot of the big players in the S&P 500, the NASDAQ composite. And this week, we had Palantir report with arguable blowout numbers across the board, and yet the post-reaction was not positive.
Yeah.
So from your perspective, what's going on?
Oh, I got a lot to unpack with that question. Let's talk about Palantir first, work
Sure.
our way back to those magnificent names. I love the fact that they're like, oh, the valuation all of a sudden is too high. Those earnings crushed it on all metrics.
Yes.
All right. We have a PE that's,
Well, I'm going to stop you right there,
Okay.
because that's the wrong metric to use.
all right. What is
I
your
I
metric?
would argue that it's PE to growth. Because
Okay.
when we look at the earnings growth that's slotted,
Yeah.
just based on what we knew, and then we factor in the fact that the company's backlog is $8.6 billion,
Yeah.
incremental operating margins north of 70%.
Yep.
Think about what that means for incremental profit growth as they monetize that backlog.
Yep.
You're going to see Wall Street's numbers come up.
Without a doubt. But what I look at it is price action and technicals
Right,
first.
right.
The story is there. The multiples, we can debate that all the time. To me, it's a cult-like stock, just like a Tesla is a cult-like stock. And that's why the multiples don't mesh. But from a technical point of view, what we saw was a breakout going into earnings. We gapped after the big announcement. After hours we were trading, and then we reversed on the call, and now we're trying to find that new home for this stock where it will settle. Where are we finding it? Around this 190 level, where we broke out above just a week before the earnings came out. So we're pulling back percentage-wise. It sounds awful, but perspective-wise, the stock is one of the biggest gainers for the year.
Right.
It broke out ahead of earnings. It couldn't keep that momentum going. It's settling back above the level from which it broke out above, this 190 level. If it pulls back to 175, this is a great opportunity to add to a name that you may have been missing out on for a while, because the growth is there, the earnings are there, and the trajectory is still in a nice secular uptrend. So I welcome this, as an opportunity to buy the stock on a dip. It didn't give us that next leg, which it has over 8 of the last 11 times it's reported. It's gone higher, and by an average of 20%. It didn't do it this time. It kind of got a little out in front of its skis.
Okay.
But what it's doing to me, price-wise, pulling back, a nice setup going forward, and the story is phenomenal going forward.
And that level that you're watching, that 175, kind of meshes with the 100-day moving average.
Without a doubt. Yeah, those moving averages are key. It's also that uptrend line when you connect the series of higher lows as we've gone up this March. But I think 190 is looking good right now as we tape this. But we're taping this during a pocket of volatility, and if this sell-off continues, then you may get an opportunity to buy it on the cheap, and that's the one time you don't want to buy it. Oh, maybe this is the time it's changed. I don't think it is. I still think this is a very big high-tech growth story, the biggest stock in the software ETF, the IGV, so this is a place you want to put money to work, and it's giving us an opportunity to get involved on sale.
So let's continue this, right? So that's one company.
Yeah.
But you said before we might be entering a pocket of volatility. So from a technical perspective, what is it you're watching that is either might be causing some alarm or are you watching for a shift that could signal more to come?
Yeah, we're seeing a few things technically. The breadth of the market, meaning the stocks that have gone up versus stocks that have gone down, has been very negative. We've seen more losers than winners at a clip that you don't historically see when you're making new highs. In fact, the new high list has over 2% new winners and 2% losers. The good news is the leadership is right. The leadership is technology. The leadership is some of the consumer discretionary names that we want to see lead, like an Amazon, Tesla on the verge of new highs. They've got another news event coming up later with the Elon Musk.
$1 trillion pay package.
Yeah, that's kind of important. You know, if he doesn't get this, then who knows what it means for that company? Because without Elon Musk, there is no Tesla, and that will be fascinating to watch going forward.
The cult leader for the cult company?
Without a doubt. And, you know, you're going to pay this guy to perform. Well, guess what? That's what they did the first time. And, we debated the pay package. But if you're an investor in Tesla, you're not investing in the electric cars. You're investing in Elon Musk.
And what's to come?
And what's to come. And what's to come, my goodness, we're going to Mars. We've got SpaceX. We've got satellite technology. There is so much under the umbrella that is Tesla, but we focus on the cars and autonomous driving, but the robotics aspect of it. To me, the sky is the limit, but you need to let them cook. And this pay package is something that will drive him and drive investors to get on board.
All right, let me bring you back. Bad breath is what you said. Anything else that we're watching?
Well, the momentum indicators, we have seen a tremendous run. We're up 6 months in a row. We haven't had a 7-month winning streak since, I believe, it was 2021. This is the longest streak since then. They don't happen very often. So a pullback, to me, is healthy and necessary. And then we're in a government shutdown. And I know the facts about the government shutdown. It's tied as we tape this for the longest one ever.
It will be the longest.
It will impact GDP. All right.
It has to.
Of course.
But what I've been saying, GA, is, Craig, let me know if you see this differently.
Yeah.
It's a speed bump that will be made whole eventually.
1,000%. But as it goes longer, how long will it take to be 100%. Made whole? But here's the next caveat. We learned it from Jerome Powell last week. Didn't really talk too much about it, but he said the available data is showing us this is what we want to do. They're now relying on data that is more survey related, and they have to interpret the data that they're getting to dictate Fed policy going forward. The market had another cut in December baked in.
Yes, it did.
The chances of that cut now are getting less and less because we're not getting data. Friday unemployment data for October is supposed to come out. We can push back.
But yeah, I would take a slightly different stance.
Okay.
Okay. To me, the big thing last week was Powell's comment that a rate cut is not baked in by a long shot.
Yeah.
Now that we've all heard him say the Fed's going to remain data dependent, blah blah blah, ad nauseum. You know, drink when he says it.
Yeah.
But that remark, which seemed rather off the cuff, I think was the most telling. And I agree with you that we are forced to rely on a lot smaller data, data set than what we've had in the past. But the data that we are getting, ISM manufacturing for October was what it was. But ahead of us, ADP.
Yep.
Do we see the reversal that the market expects in those numbers? We'll see.
Yep.
Does the service sector continue to carry the economy, and is inflation still kind of running at elevated levels? Those are the questions we need to answer.
Yep.
But we'll still get November data before the Fed meeting. So a lot more to go.
We hope so. It depends how long this drags out.
Yeah.
There are people talking about this dragging into the Thanksgiving holidays. If it does, the American public will be in an uproar. I can't imagine that they won't get their acts together in Washington and come to some CR resolution where all of a sudden, we put a stop to it, got people back to work, and can focus on things going into the end of the year.
So, we keep saying as we're taping. So just to lay the cards on the table, today is Election Day.
Yeah.
And there's going to be some outcomes in my home state of Virginia, your home state of New Jersey.
Yeah.
We'll have the mayoral race here in New York City. And I think there's one other big race that folks are paying attention to.
Yeah.
So
we have our East Coast bias. We'll focus.
Yeah. We do. So, but it'll be the outcome of that, and then I think you can layer in some of these other recent surveys where people are starting to blame the Republicans and Trump for the shutdown, for let's just say not handling the economy or addressing inflation.
Yeah.
To me, that says that I think you're right. We could see something happen sooner than Black Friday, which is what I think Polymarkets is saying these days.
Yes, they are.
So I'm hopeful, but as it relates to the data, people are not going out and collecting data.
No.
So we may not get all this make whole data, so to speak, December, January.
Yeah, I mean, when Powell said the next thing we're focused on is November 26th beige book. The beige book, like, really, this is what we're worried about? The economy in 12 different cities and their surveys that, who knows how reliable they are, but that's what he laid out the groundwork for, and that's, if the shutdown continues, that's what we'll be watching for next.
I view it as a piece of the puzzle.
Yeah.
So one of the things that you said, you didn't say it, but you kind of hinted at it. Okay. We've had a strong run. Through the end of October, S&P was up 6 consecutive months, NASDAQ 7. We could be in for a pause to refresh, as Coca-Cola's old symbol used to be, right?
Yeah,
right. Pause to refresh. Not a bad thing.
Nope.
And typically when we see this from a chartist perspective, the technical perspective, that kind of sets us up for the next move higher, yes?
Yeah, without a doubt. And what we want to see is rotation, and we're losing a little bit of that rotation. Where I'm seeing the rotation is within the Mag 7. So you rattled off Microsoft and Meta. All right, Meta is the biggest disappointment. We're bailing on them because of that $16 billion tax charge no one saw coming. But technically, it's broken down. It's got some work to do to get back into our good graces. It's now the worst performing stock in the Mag 7.
But does that mean it's a buying opportunity?
Long term, it probably is. But right now, I go where the puck is, and that's strength. Apple broke out into ahead of earnings, and it's continued that momentum. Apple has become a utility stock. This is the staple of our lives. Look, without this product, we're nothing. And we keep recycling that. The AI spend hasn't been catastrophic, yet we're worried about what are you going to do when it comes to AI, yet they keep hitting singles and doubles up the gap.
Yeah, but did you see the news with Google?
Google, another.
No. Apple and Google.
I did not see.
So Apple is going to, on the QT, use Google and its Gemini models in a select way to power the upcoming AI-enhanced Siri that'll be out next year, which should hopefully accelerate the upgrade cycle.
We need Siri to improve yesterday.
Yeah,
but
Siri's kind of a, I hate to say this, I might get flack for this.
Yeah.
She's kind of a dumb blonde.
Okay. I will never. Let's pivot real quick.
Go ahead.
You mentioned Alphabet,
also
known as Google. Change your symbol to something like ABC, which is available, and I will call you Alphabet. But Google broke out like Apple going into this earnings, and it was a solid quarter, and Gemini is improving, so their AI story is there. They have the litigation fears pushed behind them right now. They don't have to divest Chrome or their Android operating system. So this is where the rotation is. And then Amazon. Amazon finally broke out. It was my pick of the year. It didn't do too well. But it's looking good. It's not the worst performing sector or stock in the Mag 7. We're seeing those three now take the mantle. NVIDIA is still leading. We'll have their earnings in a couple weeks. Let's see what they're doing. And they just continue to hit on all cylinders. So Microsoft and Meta go to the back of the line. So the story still plays out, but it's not a tide lifting all boats. And as a result, the market is pivoting, and some of the other sectors are just not picking up the slack. And then you look at those safety stocks. There's no safety in staples right now. They're all
so when you're saying that, in saying staples, you're talking your Cokes, your Pepsis,
Kimberly-Clark,
Procter & Gamble. Yeah. Well, I mean, Kimberly-Clark's making this big acquisition for Tylenol. Any thoughts on that?
To me, it looks like a team trying to take a flyer on this injured player, hoping they come back. And that's what Kenvue has been. They still have the baby powder litigation going on in London, where Britain, as we like to call it, London is not a country. It's a big city in that country.
Correct.
It's like Boston's not the state, but but we all call Massachusetts Boston. But I digress. Kenvue right now is beaten down, and to me, it looks like Kimberly-Clark is taking a shot that this Tylenol news will eventually go away. The litigation against it will probably be beaten, and the baby powder stuff is limited to just Britain right now. So they're looking to get some great product on the cheap and hope to reap the benefits when they come back from this injury. That's how I look at Kimberly-Clark's acquisition.
So getting it on the cheap, with that in mind, we're heading into the holiday shopping season, or moving deeper into it, I guess is the right way to think about it. Costco's not performing. I like Costco personally. I've got a number of different reasons for it. We have other discount retailers, TJX, Ross stores. I think those are well positioned for the type of consumer that we have on the low to middle end.
Yep.
Upper end, American Express. But from your perspective, what's it going to take to get this group moving?
Yeah, I think it's going to take some time. And, that's something that long-term investors will have the patience for. A Costco, a Walmart that, had a tremendous run. Walmart and Costco through the roof the last 3 years. And now, they're not up that much this year. Some of these stocks are down. This is normal, but when you own them, you get a little upset. Like, come on, why aren't we keeping up with the Joneses? So these are staples that I believe that are, perfect in a long-term portfolio. But if you expect to see double-digit returns every single year, you're going to be disappointed.
So that's an interesting question, right? Especially in this environment, right? Because when we look at some of the moves we talked about earlier, whether it's Palantir or Amazon starting to work or Google, Apple, we kind of forget that sometimes things take time and they have to play out.
Yeah.
Can be frustrating. When you hear folks, whether you're teaching and your students are talking about this or other folks you're talking with, what do you say to them to help kind of frame this for them? So sometimes you need to be patient.
Yeah, well, you have a very astute audience, and everyone in your audience is a little different. They have different time frames. So you have to know your time frame. And we're talking about the general markets. You don't want to scream like, I think the next 2 weeks we could go down 5 to 10%. Well, it's a headline, but how do we look at that?
I'm laughing because those headlines, I saw them today and they talk about it, but you read the story, it's sometime in the next 1 or 2 years.
1929, the book. It doesn't tell you that 1929 is coming. It's a great read, and it tells you about Livermore, Jesse Livermore, and great stories like that. But the headline is 1929, and this is coming. And look, it's about clicks. We know that, but I want people to get a general understanding that these corrections happen. We haven't had a 5% correction since Liberation Day, since we went down 19.8%. And did have one?
No. 2 to 3 is the number we get during the year.
2 to 3.
So you would argue potentially that after such a strong run, we're kind of due.
Exactly. I think it will be your garden variety pullback with some crazy headlines, whether it's shutdown related, a change in election policy because the elections go one side, red or blue.
Right.
People will spin that to a narrative that fits what the market's doing. Palantir, perfect example. Earnings were fantastic. The stock went down. What's changed? Microsoft, solid earnings. Oh no, now we're worried about our CapEx spend when we were say that 5,000 when we were rewarded for it in the past. So the narrative is changing, but overall, I think the general trends are there. The one space that I think was talked about a lot and now is being overlooked is cyber. I look at a lot of these cyber names. Some of these trends, like a Cisco, what a boring stock, long term. But to me, these are slow and steady stocks that could get a little euphoric. God forbid, there's some cyber concerns going forward.
Let's just put it this way. Do you see any slowdown in cyber attacks?
Cyber attacks? No. In fact, that's a growth industry. If you're a hacker out there, congratulations. You have a future. Yeah.
So we own the cyber CIBR ETF. We've owned it for a long time. We're going to continue to own it. Why? Well, for the reason we just discussed. And I suspect that AI, in the hands of bad actors, we're actually going to see the volume of cyber attacks increase over time. So it's tucked away. We're not going to forget it, but we're going to benefit from it.
Yeah, without question. And that's a sector that I think you have a lot of strength. You look at CrowdStrike, you look at Broadcom. Broadcom, yes, it gets a big AI rap as well, but it's also cyber. Cloudflare has been on a tremendous run. It's pulling back. When you see these pullbacks, as a technician, you look, okay, is the trend intact? Oh, it sure is. Did it get overextended? Yes, it did. Now where's an opportunity to buy this strength?
So when you say a stock, just take Cloudflare or anyone, when you say that it pulls back, it was extended, it pulls back, but the support level is still there, what are we looking for?
Yeah, we're looking for areas where buyers generally step in. Those areas could be moving averages, a 50-day, a 200-day, but price has some sort of memory. All those prices where buyers stepped in, where sellers got aggressive. And that's what I look for, areas of support, resistance. And when something gets a little too euphoric, guess what? It generally comes back to where it was before, and then you reevaluate the trade. That you look at the sector. Has something changed in the sector? Has something changed in the overall market thesis that makes me a little skittish and maybe go bearish? I am not bearish. I am still bullish, but my horns aren't pointing out of my head. I got a little skittish in August when I was on your podcast.
I know. I remember. You had said back then the time was to be patient, wait for the opportunity. And it eventually came.
Yeah. And you know what a good investor wants to do when you are lucky enough, like I happen to be, I'm long Amazon, I'm long Google. Percentage wise, they're now growing in my portfolio. NVIDIA, you know, my parents have owned that one. I gave it to them. I never bought it. I'm an idiot. But I tell them, my father doesn't listen. The stock, he's just owns it and puts it away. But a nimble investor will like, wait a second, this was 10% of my portfolio, now it's 15%. Let me scale it back.
Correct.
And you're taking profits and you have a little money on the sidelines for that rainy day. Now, my umbrella's not out just yet, but I have it ready and I'm looking to buy some stocks that may go on sale or some turnaround stocks, and that's what I'm doing most of my work and my team at Freedom. We're looking at those stocks, those Disneys, those Starbucks, those Chipotles, those UPSs that have been beaten down. Nike, which ones are turning around? Which one gives us the best setup going into 2026? So the next time I come and we talk, I think one of my themes will be, these are some stocks, risk reward, that have been beaten down for a while. We're starting to see I hate this expression, green shoots. And, but we are starting to see some signs of life that may give us, a nice runway going forward for 6 to 12 months.
So those sounded like a lot of consumer-related names.
Yeah. Well, what's beaten down? A lot of those consumer names. So you want to look through the rubble, if you will. I looked at biotech as a sector that we've discussed that has started to turn around, but it's not every biotech stock. Some look like they were turning around, like a Sarepta, and got destroyed on earnings day. Got hurt in that one. Risk reward was favorable if it could turn around. It didn't. That's what's dangerous about biotech stocks, because each individual name has a story and a specific drug linked to them.
Correct.
So that's why you go into the IVB or the XBI, the ETFs.
Broad-based coverage.
Spit all over you.
Broad-based coverage. So if any one particular one doesn't work out, you're still relatively protected.
Can you tell me when Pfizer's going to turn around that stock?
No, I cannot.
That was a short-term hold that turned into a 20-year long-term play for me. It has a great dividend. We buy it for the dividend. We put it away.
As we move towards the end of the year, is there a sector that you think might actually start to heat up?
I'm looking at, believe it or not, and I hate this sector, the transports. The transports have been resilient in the shutdown.
Right.
The airlines, when they move secularly, so they move in a straight line. You have American Airlines, the worst performing of the big three. United would be the best one, down 1%. Delta down 3%. American is down, I think, 14%. I think once we get through the shutdown, we may see a spike there. Uber in the IYTs, the transport ETF that I like to follow, that is under some pressure after its earnings, but I think it's giving a long-term investor an opportunity to buy. And then the rails have been doing all right. The shippers are starting to turn around, and then beaten down name like UPS. It turned last quarter. I still think it needs another quarter to go. It's in a 2-year downtrend.
Right.
But it made a higher low. It gapped above key moving averages. It's in that turnaround phase. I'm watching it closely.
So on that, we have one position in the portfolio called Eaton Corp. Perhaps you heard of it?
Yeah, ETN.
Yeah.
Yep.
Great company, really benefiting from the data center build out. Their vehicle business and their e-mobility business were a little down in the September quarter. No real surprise.
Yeah.
Right? When we think about e-mobility and the slowing production levels that we've been hearing about for EVs as the tax subsidy has gone away. But on the vehicle side, we're in November, which means that the Section 232 tariffs should be a little more friendly.
Yes.
That leads me to thinking, with your comment about transports, that, better days are ahead, perhaps in the trucking sector.
Yeah, and it's always a December to remember. And Do you ever get a car with a bow on it for Christmas?
No,
see?
never.
No,
Never.
Me neither.
Never.
Me neither.
Never.
Maybe one day.
So, correct me if I'm right, though. If I'm wrong, sorry.
Yeah. I'll correct you if you're
If I-
right as well.
please do.
Yeah.
Please do. Transports move higher. Good sign for the overall market.
It's a great sign for the overall market. It's the one thing that old school people, the Dow theorists of the world,
Right.
and it's a different world. The things that make and the things that take. The industrials have been doing well. We've seen the Dow Jones Industrial Average make new highs. The transports have been lagging, but what are they doing? They're basing, and it looks like they can break out and possibly join the party and confirm this secular bull market we've been in for roughly 3 years. But I don't put my hat on, we need Dow theory to confirm things. No, technology is leading. Technology is the leadership.
Okay.
That's what you look. So there is a new Dow theory out there, but the old school people that, make us learn the Dow theory and teach it, and I teach it in my class. It's still the things that make and the things that take, but there's a new angle to it. And the sectors that need to lead are communications, Google, Meta. It's discretionary, Tesla, Amazon, and then it's technology, NVIDIA, Apple, Microsoft. And those are the sectors that have been doing well. Discretionary has been lagging. I think we're seeing a breakout in it now, thanks to Amazon. If Tesla can resolve to the upside, it's had a 5-year base. It can really break out. Tesla's one to watch in 2026.
So, with your bullish stance, longer term, we're looking at some now targets start to emerge for the S&P 500.
Yeah.
Lofty. 7750. I think someone was out with it earlier this week. If we don't see EPS numbers come higher, 2025, really 2026 now, that means the multiple gets really big. And I know what you said earlier about multiples, but, from your perspective, when you see numbers like that, you get a little nervous? Are they overly aggressive?
Year-end targets are fun, and I have mine. I am watching 6,900 very closely because that's what I said we would end up this year. I have not come up with my year-end target, but when you say 77.50, all right, that's 12%. That's a little above an average year after a tremendous 3-year run.
Right.
Barring we don't see anything crazy happen into the end of 2025. I still think we finish higher, but I don't know if the momentum will be there to have another strong double-digit rally on top of this. But I don't think we'll derail the rally. There are a lot of X factors we're looking into going into the second year of the presidential term. Those midterms next year, a year from now, will be very interesting. Tariff resolution, it seems like we're getting there, but the Supreme Court ruling, they're meeting literally today, November 5th, when we tape this, to discuss whether or not the tariffs are legal. Now, I studied this. I'm not a lawyer, but I play one on TV. They're not supposed to resolve until late spring, early next summer, June. I don't know if there will be a leak, but what every CEO is watching, every market participant should be listening for, is if these tariffs are not deemed legal, then we have a new problem.
Yes,
all
we do.
right?
Yes,
We have to pay them back.
And where does that come from? How does it happen?
Yeah, I don't know.
And do consumers get a bite of this?
Yeah, this is new territory for me. I don't have a playbook on this.
Yeah, I don't either.
But I do know it will cause a whole new wave of uncertainty. And one thing we learned this year is the market doesn't like uncertainty. When President Trump went out on Liberation Day, the thought was we were going to have 15% across the board with maybe a few wonky countries with different numbers. And then he held up that big, beautiful chart. Was it a big, beautiful chart?
I think he said it was.
Yeah, okay. Then if he said it, then it has to be true. Just that's my mouth. But I digress. We edit that out. I digress. What happened was we have a new wave of uncertainty. And when that hit the market, we sold off dramatically. And then once we walked it back, yes, the taco trade was born. We have slowly progressed. We had that V-shaped recovery, and now when we hear tariffs and we see tweets, we don't take them very seriously.
No.
It's like the boy that cried wolf. We're backing down and we're not scared by it. But if the Supreme Court dictates the narrative and changes it, we have to go back to the well again and see what the administration does to try to circumvent that decision if it is negative. Or if it's positive, maybe it's business as usual and we rally. But CEOs watching this, their earnings depend on the tariffs and how they navigate those.
Correct.
So
and if there's
that
more,
will be the story for next year.
Yeah, and if there's more uncertainty, should it come about, that's going to be a real issue when we start to get firm 2026 guidance in January.
Exactly.
Okay. Let's go to some member questions, Jay.
Oh, please. I love them. They always stump me. So
all right, here we go.
Maybe I don't love them.
So we got three. First one. What do you think is a risk facing the market that hasn't gotten the attention it deserves, and how can we, or you, position us to overcome it?
Well, that's a great question, one I ask every day to myself. You never get hit by the bus you see coming. So all these fears, all these things that we think could derail the market, it will be something we didn't expect. A Supreme Court decision at any time, or a leak of that decision, like the reversal of Roe v. Wade was leaked, that is something that has me concerned. That's what we just discussed.
Right.
As far as anything, just a crazy earnings miss that we didn't expect. Meta just hit us with one.
I was just going to say, we're kind of behind a lot of the big ones that are left. I mean, NVIDIA would be the next one.
Yeah, NVIDIA, I mean, Jensen does not seem like somebody who seems, he doesn't lack confidence as far as the earnings growth projections. No. He's out there on stage dancing around.
But there is a risk in the sense that, given everything that we've heard about of late in the last few weeks, all these big deals, OpenAI and Microsoft, right? Yeah. Amazon and OpenAI, that expectations for what the print is and the guide is, what NVIDIA reports, the market, whisper numbers, they like those, could be stretched a little bit.
Yeah,
that could be the problem.
And I look at the rotational spending, like, Oracle benefits from NVIDIA benefits from OpenAI. OpenAI goes back to Oracle. Wait a second, this is the same money going from one to the next to the next. Will it continue to spiral upward? Or will there be a stumbling block that, wait a second. And I think next year we're going to see winners and losers, and the tide won't lift all boats. And now the tide isn't really lifting all boats into the year end, but the trajectory continues to be upward. Some of those software names, the Salesforces, the Adobes, they're falling behind. What are the next companies that can't keep up? Because the winners, the Amazons, the Googles, they're winning at the expense of somebody else. We haven't seen that next shoe drop as to whom that may be.
Interesting. All right, next question.
That means we have more work to do to figure out who that will be and report back.
Yes. All right. Are you seeing any divergences between the S&P 500's price action and underlying technical indicators like the RSI or MACD that might signal a shift in market momentum?
We saw a negative bearish divergence a couple months ago where the momentum indicators were starting to go down as we were making new highs. Now we're starting to see price and those new highs fall back a little bit in the overall indices. It's only been a week and a half, so I'm like, this isn't much of a pullback.
Okay.
But the momentum indicators are starting to fall in line with the overall price action that we're seeing as of the first week of November. So there's nothing that is lighting the world on fire, but we are seeing a record amount of new highs and new lows at the same time.
Right.
Now, I haven't done a deep dive in the McClellan oscillator, but when you see over 2% new highs and over 2.8% of new lows, while we're at close to 52-week highs above the 50-day moving average, let's say, that is a trigger for what we call the Hindenburg omen. The McClellan oscillator has not confirmed that. If we see that confirm, and I'm not an expert on the McClellan oscillator.
Well, hang on, and let me just back you up. So for everybody who's watching, listening, Hindenburg?
Yeah, it's the Hindenburg is, oh my God, it's a tragedy. It's the worst thing that's ever going to happen.
Okay.
The last time this triggered was in June of 2024. We had a 10% correction during that time. So if we're to get a 10% correction, it'll be the second one this year. We usually have one per year. It would probably set up for a nice buying opportunity, but you may hear the Hindenburg omen thrown out there. It has not been triggered, but there are little bells and whistles going off that it could be in our sights. I would yield to Tom McClellan of the McClellan oscillator. He is an expert on that topic.
Okay.
And I think he's a friend on Twitter, so we should reach out to him.
So before we get to our last member question, you said earlier, pause to refresh.
Yeah.
Building your shopping list, looking for opportunities for next year. So to the extent that we see this Hindenburg momentum issue show up, it's another reason to be doing what you're doing.
You have to do your research. You have to know, all right, if this stock that I love or I own goes, down with, say, a market flush out, you want to buy the best stocks, relative strength speaking, the best in class. So the best in class in those sectors that are getting hurt, transports, it's Uber. I think Uber is one of the reasons we're going to stall for a second in the transports, but can lead us on that leg higher. When you look at the Magnificent Seven names, NVIDIA, we had a consolidation period of almost 9 months, around 150 before we took off. The upside target was 185 to 200. We hit it. I can't see what's going to take us another 50 points higher right now.
So from your perspective, it could be very similar to what we saw in the middle of last year, late July timeframe, where it was a fantastic buying opportunity for those who were prepared.
Yes, and what I look at, it's the sector I hate the most, small caps. Small caps. Yeah, I know. Every time you think they're going to go, they pull us back in. They had a major breakout. They're still above key levels, former resistance. We're getting pullbacks. They are extremely volatile, especially around rates. But if we can get through this Fed conundrum right now, Jerome Powell has 4 more meetings left, and see where we go ahead of time, I think there is still a runway for the Russell to go to 2,800. It's about 2,450 as we tape this over the next 12 months. But every time I think they're broken out, something comes to change the narrative in the small caps.
Godfather 3, huh?
Yeah, and the small caps, it's not the leadership we want to see.
Right.
But they definitely have a lot of catching up to do, and that could be an area to put some money to work. It's an area that I'm not a big fan of, but
so more,
it looks
we
good.
Would recommend more of an ETF play or individual stock?
Without a doubt. I buy the IWM, which is the Russell ETF. That's a nice broad arranged basket. So that's the way to play it if you want to allocate something to a little more, a diversified portfolio. When you have times like this, you buy volatility, but if you get a 10% return in your VIX or your double levered VIX ETF, you take it off the table because these VIX spikes don't last too long. And I think we could see a VIX back over 20, and that's probably when it's time to buy equities and sell the volatility if you're in it for that, time frame.
Okay, last question, and then we're going to do something a little fun. All right, last question. What are some of the key indicators that you, Jay Woods, are watching, and how might they impact your current strategy?
Yeah, I'm always, momentum indicators, RSI and MACD, relative strength index, over 70, overbought, below 30 in some of these individual names. We're seeing it. What I like to do is put a trade on when we get back above an oversold condition, so it goes back above 30. I don't have my shopping list because I wasn't prepared for this question.
That's all right.
I apologize. It's good. I'd rather not be prepared. I'd rather you hit me with tons. But those momentum indicators have been very true to my, career continually. We don't see any alerts as far as momentum right now in the overall indices, but certain names have been overbought. They're pulling back, and that is an opportunity to see now that we're pulling back from overbought conditions. What is the underlying trend, and where can I buy to get back in these names? Because just because something's overbought doesn't mean it has to be sold, but it means that we may slow down in that momentum. And some of these stocks, like a Palantir, was extremely overbought. It's pulling back, and now it's coming to trend lines, a 190, a 175, where I think it's a good place to put money to work if you weren't in the name to begin with.
That was a great segue, Jay, because now we're good. Since we're here at the New York Stock Exchange,
my
we're going to, well, your home, but it's also the home of Carolyn Woods, who does all the video for TheStreet.
Oh, Carolyn's the best.
She is fantastic.
Yep.
She is fantastic.
No relation.
I didn't even think of that.
Yeah.
But she likes to ask, some interesting questions. And one of them is this or that.
Yeah.
So you just said Palantir. So now I'm going to give you a this or that. You ready?
Yeah.
All right. Palantir or Meta?
Palantir.
All the time? All day long? Right now?
Right now, yes.
Okay. Palantir or Tesla?
Palantir, Tesla, too many question marks. We need price confirmation before we jump in there.
Okay. You talked about Amazon earlier. You talked about Walmart earlier. Which one?
Oh, Amazon every day. I own both, to be honest with you. Diversify. Walmart, slow, steady growth. Great company. Amazon, right now, breakout, ride the momentum. I think it's a stock with the AWS platform to ride into 2026.
Walmart, TJX. Holiday season.
Walmart, less volatile, more reliable. TJX, we see pockets of volatility. Both good brands, but Walmart is my go-to.
All right, I'll disagree with you on that one. I like
I know
TJX
you
more,
do.
right in line with the cash-strapped consumer. No real impact to tariffs because
Yep.
they buy their goods from others. So, well, we'll see who's right when you come back with that shopping list.
Sounds good. I look forward to it.
Awesome.
Thanks for having me.
Folks, that is the one, the only Jay Woods. Jay, thank you again so much. We always value your insights and spending time with us here at the New York Stock Exchange. Folks, that is our podcast for this week. Tune in soon when we'll bring you yet another fresh episode. Thanks for watching.